this video, I'm going to discuss about joint product costing. Before we discuss about joint product costing, let's get to know about what is joint product manufacturing. Joint product manufacturing is the production process in which multiple valuable and distinct products are simultaneously generated from a common input or raw material. This means a common process is going to produce multiple valuable products at the same time using a common input or raw material. It involves a single manufacturing process that results in the creation of two or more joint products. This is really important. When it comes to joint product manufacturing, a single manufacturing process will produce two or more products. This is the main characteristic of joint product manufacturing. A single process will produce two or more products. These products are known as joint products. These products are typically intended for separate markets or have different applications despite originating from the same production process. Simply this means each of the joint products have their separate markets and market values. Now let's consider this example. Company A buys coconuts from farmers. So coconuts is the raw material for this company. Then these coconuts will undergo a common production process which is dehusking. After this common production process, we can easily identify two products. These are the joint products. The first joint product is the dehusked coconuts. The second joint product is the coconut husks. Both of these products have their own markets and market values. So the company A can sell dehusked coconuts and coconut husks to other companies. Now let's get to know about these terms. These terms are really important when it comes to joint product manufacturing and joint product costing. The first one is common process. A common process refers to the production process that is shared among the joint products and byproducts. Now you may think, what is the difference between the joint products and byproducts? We will discuss about these two terms here. So for now, understand that a common process in a joint product manufacturing is going to produce two or more products. It is the initial stage where the raw material undergoes transformation, resulting in the creation of multiple products. In the case of coconuts, the common process was dehusking coconuts. Let's go back to the example. So this is the common process that the company A is used to produce their products. This common production process will produce joint product 1 and joint product 2. Now let's discuss about the second term, split off point. This is also known as the separation point. The split off point is the stage in the production process where the joint products and byproducts become identifiable and can be recognized as separate entities. In the coconut example, the split off point occurs when the coconut is processed into dehusked coconut and coconut husk. Let's go back. So this is the split off point of this production process. This split off point comes after the common production process. At this split off point, we can easily identify the products that will be produced using the common production process. In this case, dehusked coconuts and coconut husks. The third term, joint product. Joint products are two or more distinct products that are produced together as a result of a common production process. These products are derived from a single input or raw material and each has significant value and utility on its own. In the case of coconuts, dehusked coconuts and coconut husks are joint products. So what this means is, at the split off point, we can identify the joint products that will be produced using the common production process. These joint products have their own market value and utility. These joint products will be produced using a common input. In this case, the coconuts that are bought from the farmers. The fourth term, byproduct. A byproduct is an additional product that is also obtained during the production process. This means the same common process is going to produce byproducts, but it has relatively lesser value or utility compared to the main joint products. As we discussed earlier, joint products have significant value and utility, but when it compares to byproducts, they have only a lesser value or utility. This is the main difference between the joint products and byproducts. Joint products have a significant value and utility, whereas byproducts have only lesser value or utility. Byproducts are often incidental to the production of the main products and may not be the primary focus of the production process. This is really important. What is the meaning of incidental? Incidental means we are expecting this to happen. What is the opposite of incidental? It is accidental. Accidental means we are not expecting something to happen, whereas incidental means we already know something is going to happen. So remember that byproducts are incidental, which means we already know that there is a byproduct is going to produce because of the common production process. And also remember that the primary focus is not to produce byproducts. The primary focus is to produce joint products because joint products have significant value and utility, whereas byproducts have lesser value or utility. In some production processes, there will be no byproducts. This means not every common production process is going to produce byproducts. Some common production processes are not going to produce any byproducts. Here is the example we discussed earlier. Now you know these coconuts are the raw material, which is also known as the common input because this input is common for both these joint products. And this raw material is also known as the joint input because this input is going to produce joint products. And this is the common production process, in this case dehusking. And after the common production process, we can identify the split off point. This is also known as the separation point. At the separation point, we can easily identify the joint products. In this case, dehusked coconuts and coconut husks are the joint products of this common production process. These joint products have significant value and utility. In this example, there is no byproducts. In the next example, there will be a byproduct. So you will understand the concept of byproducts there. So as we discussed earlier, this is the company A. They buy coconuts from farmers and they process these coconuts in order to produce dehusked coconuts and coconut husks. And they sell these dehusked coconuts to company B. Now let's discuss about the joint manufacturing process of company B. So company B buys dehusked coconuts from company A. So this is the raw material. This is also known as the common input and this is also known as the joint input. And this joint input will undergo a process 1. This is the common production process of company B. After the split off point, now there are 3 products: coconut meat, coconut water and coconut shells. Coconut meat, coconut water and coconut shells. As now you can see, the company B has identified joint product 1 and joint product 2. So what about this product? So this is the byproduct because this product has a lesser value and utility, whereas coconut meat and coconut water has significant value and significant utility. So now you can understand a common production process will produce both joint products and byproducts at the same time. But also remember that not every common production process will produce byproducts. So the production of coconut shells is incidental or accidental. This is incidental because company B already knows that they are going to produce coconut shells because of the common production process. This is not accidental. They are already expecting this to happen. So now you know the basics of joint product manufacturing. Now let's go one step further. What is further processing? Further processing is the subsequent treatment or refinement of a product or raw material after an initial stage of production or processing. Simply, this means further processing happens after the common production process. Further processing will add value to the joint products. It involves additional steps, operations to enhance the value, functionality, or marketability of the product. Simply, this means further processing is going to add value to the joint products. This is the example we discussed earlier. Company B buys dehusked coconuts from Company A, and these raw material will undergo a common production process, which is process 1. At the split off point, we can identify three products. Joint product 1, which is coconut meat, joint product 2, which is coconut water, and a byproduct, which is coconut shells. Now the company can decide whether or not to further process their joint products. They can further process coconut meat into desiccated coconut. They can also make a decision to further process coconut water into bottled coconut water. Remember that we are not going to further process byproducts because we are only interested in the joint products because they have a significant value and utility, whereas byproducts have lesser value and utility. So these are the further processing steps. Further processing will be done to joint products separately. Companies have to make decisions whether or not to further process their joint products. Later in this lecture, we will discuss about how to make these decisions. So these are the basics of joint product manufacturing. Now let's discuss about the main topic of this lecture, which is joint product costing. Joint product costing is a method used to allocate costs to multiple products that are produced simultaneously from a common production process or set of inputs. Simply, this means joint product costing is going to be used in joint product manufacturing to allocate costs into multiple products. This happens in industries where a single manufacturing process, this is also known as a common manufacturing process, generates two or more distinct and valuable products known as joint products. We already discussed about this. Joint product costing is mainly used in manufacturing industries rather than in service industries. Because in the service industry, joint product manufacturing is almost impossible. But when it comes to manufacturing industries, joint product manufacturing is very common. The main objective of joint product costing is to fairly allocate the joint costs incurred during the common production process to each of the resulting products. This means joint costs will be incurred during the common production process. Joint costs are the costs incurred up to the point where the joint products become identifiable and can be measured separately. Simply, this means joint costs will be incurred up to the split off point. Joint costs are indirect costs. Joint costs include raw material costs, labor costs, and overhead costs. Now you may think, how can raw material costs, and labor costs will be indirect costs under joint product costing. This is because these costs will be incurred during the common production process. These costs cannot be identified separately to each product at the split off point. This is why these are known as indirect costs when it comes to joint product manufacturing. Whereas further processing costs are directly identifiable for a specific product, whereas joint costs cannot be separately identified for a specific product. As now you know, further processing costs will happen after the split off point. This is the split off point, and after the split off point, further processing costs will be incurred. Further processing costs will be directly identified for a specific product because the company can decide to further process joint product 1 into desiccated coconut. So this will be the further production. Any cost that will be incurred during this production process can be identified for this desiccated coconut product. Likewise, the company can decide to whether or not to further process coconut water into bottled coconut water. Any cost that will be incurred in this further processing can be easily identified for this product for the bottled coconut water. This is why these are known as direct costs. Simply you can remember up to the split off point, any costs that will be incurred will be considered as joint costs, which are indirect costs, because we cannot identify these costs separately to the products. Any cost that will be incurred after the split off point are known as separable production costs. These are direct costs because any further processing costs can be easily identified to each product separately. Now let's discuss about accounting for byproducts. Accounting for byproducts are done separately from the main joint products. This is really important. Accounting for byproducts are done separately from the main products. So do not mix the accounting of byproducts and main products together. Always account for byproducts and main products separately. The net proceeds from selling the byproducts will be adjusted with the common production cost, which is joint costs. So what is the net proceeds from selling the byproducts, which is this? This is also known as the byproduct residual value. This is the value that the company can earn by selling the byproducts after deducting all the costs associated with selling the byproducts. So the net proceeds of byproduct is equal to sales revenue of the byproducts minus selling costs of byproducts. Now let's go back to the example. So in this case, the byproduct is the coconut shells. The company can sell this byproduct to another customer. So what they have to do is they have to account for these byproducts separately. They have to calculate the net proceeds from selling these byproducts, which is equal to revenue from selling this byproduct minus any cost associated with selling this byproduct. Then what we have to do is we have to adjust this value with the joint costs. This is the accounting for byproducts. Always remember we have to account for joint products and byproducts separately, and then we have to adjust this value with the joint costs. So if the net proceeds by selling the byproduct is positive, we can adjust this value with the joint costs by deducting the net proceeds. Because joint costs is a cost to the company, positive net proceeds is an income to the company. So we can deduct this income from the cost. Let's say the net proceeds from selling the byproduct is negative, which means it will become a cost to the company. So what we have to do is we have to add the negative net proceeds from selling the byproduct to the joint cost, because in this case net proceeds is a negative value, which means it is a cost. Joint cost is already a cost. So what we have to do is we have to add the costs together. I hope this is clear. This is how we can account for the byproducts if there are any. Now let's do this example. This is the same example we discussed so far, which is this. After the common production process of company B, 8,000 kilos of coconut shells can be produced per batch. 1 kilogram of coconut shells can be sold to company Z for $1.2, and the transportation cost of coconut shells is $1,200. Coconut shells are categorized as a byproduct by company B. This means company B has categorized coconut shells as a byproduct. Calculate the net proceeds from the sale of coconut shells. And there is a part 2. If the joint costs are $28,000 per batch, what is the adjusted joint cost with the net proceeds of byproduct? First of all, let's do the part 1 first. Calculate the net proceeds by selling the byproduct. So there will be 8,000 kilograms of coconut shells. So this is 8,000 kilograms of coconut shells per batch. And the company B can sell these coconut shells for $1.2 per kilogram. So this is the revenue the company B is going to make by selling the byproduct. Then we have to deduct any costs associated with selling the byproducts. So they are telling us there will be transportation cost of $1,200 to sell these coconut shells to the company sale. So we have to deduct the cost. So the net proceeds by selling the byproduct is equal to $8,400. This is the net proceeds. This is a positive value, which means this is a profit to the company, because the sales revenue by selling the byproduct is higher than the costs associated with selling the byproduct. So the net proceeds is equal to $8,400. Now let's do part 2. So what we have to do is we have to adjust the joint costs with the net proceeds of byproduct. So the joint cost is equal to 28,000, and the net proceeds by selling the byproduct is equal to $8,400. Since this is a positive value, we have to deduct this value from joint costs. So the adjusted joint cost is equal to 28,000 minus 8,400, which is equal to $19,600. So the joint cost is equal to 28,000, and we adjust with the net proceeds from byproduct, which is 8,400. So the adjusted joint costs is equal to $19,600. This is how we account for the byproducts. Now you can understand we have deducted the net proceeds from the common production process cost. Then only we can account for the joint products separately, which is the next step. Now let's account for the joint products. Since joint costs are indirect costs, these cannot be allocated to the joint products directly. Therefore, joint costs will be apportioned to joint products. We already know about this topic, apportioning. Apportioning comes when there are indirect costs. Since the joint costs are indirect costs, we have to apportion these common costs to the products separately. This is really important. Do not apportion joint costs to byproducts. Only apportion joint costs to joint products. Which means after accounting for the byproducts, as we did earlier, we do not consider byproducts again. If you can remember, accounting for byproducts are done separately from the main joint products. So do not mix the accounting of byproducts and joint products together. We have already accounted for the byproducts. Now we are going to accounting for the main products. When it comes to apportioning joint costs to joint products, there are three methods. We can use one of these three methods. The first one is physical units method. This method assigns joint costs based on the relative proportion of physical output or production volume of each product. This means we can consider kilograms, liters, number of units, likewise, any physical units we can measure. The assumption is that the costs are incurred in direct proportion to the physical quantities produced. The second method is sales value, which is the market value at the split of point method. This method apportions joint costs based on the relative sales value of each product. It considers the market value or selling price of the individual products as a basis for cost apportionment. Products with higher sales values will bear a higher share of the joint costs. This means we have to consider the market value at the split off point for each joint product. The third method is net realizable value method. This approach assigns joint costs based on the estimated net realizable value. Net realizable value is equal to sales value after further processing minus further processing costs of each product. It takes into account the additional processing required after the split off point and apportions costs accordingly. So this is the equation we can use to calculate the net realizable value of each joint product, which is equal to sales revenue after further processed minus further processing costs. Apportioned joint costs for each product will be different based on the method of joint costs apportion. This means these three methods will not give the same apportion amount for each joint product. If there is inventory of the joint products, valuation of the inventory will be also different. Hence, the profits will be different. This means based on the apportioning method, the inventory valuation will be different. Inventory valuation will cause to profits to be different. Now let's do this example. This is the same example as we discussed so far. So what we have to do is we have to apportion the joint costs to each joint product. In order to do that, first we have to do is we have to account for the byproducts. And then we have to adjust the net proceeds with the joint costs. Only after that we can apportion the joint costs to joint products based on one of these three methods we discussed earlier. So we already calculated the net proceeds and the adjusted joint costs. The net proceeds is 8,400 and then we adjusted it with the joint costs. So this is the adjusted joint costs 19,600. Remember that first we have to adjust the joint costs with the net proceeds from selling the byproducts. So the adjusted joint costs is equal to 19,600. So this is 19,600. Now let's apportion this common cost between these two joint products. Remember that we do not apportion common production cost to the byproducts because once we adjust the joint costs with the net proceeds of the byproduct, we do not consider byproducts again. So they have given us output at split off point for joint product 1, which is 52,000 kilograms. For joint product 2, this is 12,000 kilograms. As now you can understand, these are physical values, kilograms. So we can use the first method in order to apportion the joint costs to joint products. So now let's apportion the joint costs among joint products using the first method, which is physical units method. So the adjusted joint costs is equal to 19,600 multiplied by the total output at the split off point, which is equal to 52,000 plus 12,000 kilograms. And for the joint product 1, the output at the split off point is 52,000. This will give us the apportioned joint cost to the joint product 1, which is equal to $15,925. Now let's calculate for the joint product 2. 19,600 multiplied by 12,000 divided by the total output at the split off point, which is equal to $3,675. As now you can see, we have successfully apportioned this cost among the joint products. For joint product 1, it is 15,925. For joint product 2, it is $3,675. As now we know, we do not apportion the joint costs to byproducts. Now let's go back to the table. Now they have given us the selling price per kilogram at the split off point. Joint product 1 $10, joint product 2 $8, which means joint product 1 can be sold for $10 per kilogram at the split off point, whereas joint product 2 can be sold for $8 per kilogram at the split off point. Now using the second method, which is the sales value or the market value at the split off point, we have to apportion the adjusted joint cost to the joint products. This is how we can do that. The second method, sales value at split off point. So we are going to apportion adjusted joint costs, which is equal to 19,600. Then we have to calculate the sales value. So the sales value is equal to 52,000 kilograms multiplied by $10 plus 12,000 kilograms multiplied by 8. This is because we have to take the sales value, not the sales price. So for joint product 1, this is equal to 52,000 multiplied by $10. This is the sales value for joint product 1 at the split off point. For the denominator, we need to take the total value. This is equal to $16,545. Now let's calculate for joint product 2. Remember that we need to calculate the sales value. We cannot use the sales price directly. This is equal to $3,054.5. As you can see, these values are not the same. This is because we used different methods to apportion the joint costs. Now let's go to the table again. Now they have given us the selling price per kilogram after further processed. For joint product 1, it is $17. For joint product 2, it is $13. This means if the company decides to further process coconut meat into desiccated coconut, they can sell 1 kilogram of desiccated coconut for $17. And if the company decides to further process coconut water, they can sell 1 kilogram of bottled coconut water for $13. And also they have given us the further processing cost. For joint product 1, it is 84,000. For joint product 2, it is 146,000. So now what we have to do is we have to go for the third method, which is the net realizable value method. Net realizable value can be calculated by using this formula, which is equal to sales revenue after further processed minus further processing costs. So first of all, let's calculate the net realizable value for joint product 1 and joint product 2. For joint product 1, it is equal to 52,000 multiplied by 70. This is the sales revenue after further processed minus further processing cost, which is 84,000. And for the joint product 2, the net realizable value is equal to 12,000 multiplied by 13 minus 146,000. So the net realizable value for the joint product 1 after further processed is equal to 800,000, and the net realizable value for the joint product 2 after further process is $10,000. Now we can apportion the adjusted joint cost to joint products separately. So this is the adjusted joint cost multiplied by, now we are going to consider the net realizable value. For the denominator, we take the total net realizable value. This is equal to $19,358. For the joint product 2, it is $241.9. So this is how we can apportion the adjusted joint cost to the joint products using three methods. As you can clearly see, these three methods will produce three different values when it comes to apportioning the costs to each joint product. Now let's discuss about the next topic in this lesson, whether or not to further process. If the net realizable value of a joint product is greater than the sales revenue at the split off point, we can decide to further process. If the net realizable value of a joint product is less than the sales revenue at the split off point, we can decide not to further process. We already know how to calculate the net realizable value of a joint product, which is equal to sales revenue after further processed minus cost of further processing. If the net realizable value is greater than the sales revenue at the split off point, we can further process. This means if the net realizable value of the desiccated coconut is greater than the sales value of the coconut meat, we can decide to further process. Otherwise, we can decide not to further process because it will make a loss. We can explain these two conditions as follows. If the net realizable value is greater than sales revenue at the split off point, which means the incremental revenue of the further process is greater than the incremental cost of further process. If the net realizable value is less than the sales revenue at the split off point means incremental revenue of the further process is less than the incremental cost of further process. What is the incremental revenue? Incremental revenue is equal to sales revenue of a joint product after further process minus sales revenue of the same joint product at the split off point. Now let's go back and see whether to further process our joint product 1 and joint product 2. So we have already calculated the net realizable value for joint product 1, which is $800,000, for the joint product 2, which is equal to $10,000. These are the net realizable values. So for the desiccated coconuts, the net realizable value is $800,000. For the bottled coconut water, the net realizable value is $10,000. Now we have to calculate the sales value at the split off point for both joint product 1 and joint product 2. So for the joint product 1, the sales value at the split off point is equal to 52,000 multiplied by 10. For joint product 2, the sales value at the split off point is equal to 12,000 multiplied by 8. So 52,000 multiplied by 10, which is equal to $520,000. For joint product 2, 12,000 kilograms multiplied by 8, which is equal to $96,000. Now we have to compare and see whether to further process joint product 1 and joint product 2. So for joint product 1, the sales revenue at the split off point is 520,000 and the net realizable value is $800,000. So the net realizable value is greater than the sales value at the split off point. This means we can further process because this will make us a profit. For the joint product 2, the sales value at the split off point is equal to $96,000 and the net realizable value for joint product 2 is equal to $10,000. In this case, the sales value at the split off point is greater than the net realizable value. This means if we decide to further process joint product 2, we are going to make a loss. So do not further process joint product 2. So this process will not happen. Simply this means the company can further process the coconut meat into desiccated coconut while they have to sell the coconut water as it is without further process. Now let's discuss about the final topic of this lecture, whether to carry out the whole process or not. If the total revenue of joint products is greater than the adjusted joint costs, we can carry out the whole process. If the total revenue of joint products is less than the adjusted joint costs, do not carry out the whole process. This is important. If a joint product is further processed, take the net realizable value. If not, take the sales revenue at the split off point. We already know how to calculate the adjusted joint cost, which is equal to joint costs minus net proceeds from the byproducts. So now let's see whether to carry out the whole process or not for the example we have discussed so far. So these are the values we have calculated so far. The joint costs before adjusting is equal to $28,000. The net proceeds by selling the byproduct is equal to $8,400, and we have decided to further process joint product 1 because the net realizable value of the joint product 1 is greater than the sales revenue at the split off point. So we take the net realizable value because this is the final value. And as we discussed earlier, we are not going to further process the joint product 2. So we take the sales revenue at the split off point. The reason we are taking the sales revenue at the split off point that we decided not to further process joint product 2 because the net realizable value of the joint product 2 is less than the sales revenue at the split off point. So now let's calculate and see whether the company B can carry out the whole process or not. So we have to calculate the total revenue and the total common production cost. So the total revenue is equal to $800,000, which is the net realizable value of joint product 1, and $96,000, which is the sales revenue at the split off point for joint product 2. Always remember, we do not mix joint products and byproducts together. We account them separately. So this will be the total revenue of this whole process. So what is the total common production cost, which is equal to $28,000 minus $8,400. This is the net proceeds from the byproduct, and this is the joint cost. We did this earlier. This is how we calculate for the byproducts, which is equal to $19,600, and the revenue is equal to $896,000. So clearly, total revenue is greater than the total common production cost because total revenue is equal to 896,000 and the total common production cost is equal to $19,600. So clearly the revenue is greater than the costs. So we can carry out this whole process because it will be profitable. Thank you for watching. See you in the next video.